everyone, and welcome to the Papers Leadership Insights. My name is Vana Iflim. I'm lead editor at the Papers, and I'm happy to be joined by John Karantzis, CEO of ISX Financial. John, thank you very, very much for joining me.
Thank you, Anna. It's certainly a pleasure to be here this morning.
Fantastic. Well, looking forward to speaking with you, John, about how open banking is redefining customer and merchant relationships in the digital age. But first, can you maybe share some details about yourself and the company, please?
I'd be delighted. So myself, I'm the CEO of ISX Financial. I have a background in engineering and law. Haven't obviously practiced in those for a long time, having been running this business since 2011 now. We are a public company based out of Cyprus. We have been profitable for the last 6 years. We employ roughly 180 staff. We are very EU and UK centric in terms of our operations at the moment. However, we are looking to grow into North and South America probably over the next 18 months.
Thank you. And now I would like to start off with a broader question. John, what are the primary needs and challenges that of merchants when it comes to business growth and success?
Well, I don't think that these have fundamentally changed since I started, in the payments area in 2011. But what a merchant typically looks for is speed to checkout, payment choice, as in they want to have the widest range of payments available to them, so when a customer comes to them, they can accommodate the customer with whatever is in their wallet, right? They want reach, so they want to make sure that they can access customers within the sort of, let's call it the universe that the merchant is servicing, where that universe is Europe, the UK, or globally. So reach is very important. Then finally, we have cost. So the means has to be cost effective for the merchant. It can't cost them so much that their margins are overtaken by the payment method. And then of course, settlement period. And settlement period is absolutely critical, particularly when you're dealing with cross-border, because as you're aware and your listeners would be aware, settlements with cross-border can take a long time and can sometimes suffer all sorts of challenges in terms of the settlement actually, let's say, getting there. Right. So, I think those factors are really the key for merchants, and they have not changed in certainly almost close to the 15 years that I've been in payments.
Okay, and how does open banking change in that and transforming the traditional customer merchant relationship, and maybe what are the implications for long-term business strategies?
Well, I think what open banking does, because it leverages the domestic ACH, the automated clearinghouse, such as SEPA or FPS, what it does, it brings an instantaneity to the settlement. So it resolves one issue straight away, which is when will I get paid as a merchant? And of course, when will I get paid as a merchant solves the customer's query of when will I get delivery? Because one, obviously is contingent upon the other. The merchant needs to have assurance that they will get paid, and the customer wants to know how quickly they can get a delivery. Now, what open banking does, it provides the customer with a means to actually use debit as opposed to credit, use funds that they have in their account. And of course, customers in Europe predominantly like to use debit as opposed to, say, US customers who like to use credit. So open banking is very, very focused on being able to access your debit account and very conveniently, obviously, launch a payment from your payment account towards the merchant on these ACH rails, the clearinghouse rails, such as SEPA, most of which now, or almost most of which transactions are now tending towards instant or faster, as we call them in the UK, which means that we have that interaction between the customer and the merchant, which is pretty much real time. It's within seconds. So the merchant is actually able to see the money land in their account and then, effect delivery pretty much straight after that.
Thank you so much. Well, you already touched a couple of things, but maybe you can elaborate a bit more on the advantages of instant API payments for both merchants and consumers.
Yeah, so we've changed the model a little bit as ISX. When open banking was conceived, it was conceived predominantly as an A to A, account to account, without an intermediary. And open banking was always perceived as, you have a technical service provider or PISP, payment initiation service provider. Lots of words that are quite jumbled in there. Have an entity that starts a transaction on behalf of the customer, accesses the customer's bank, and transmits to the merchant's bank. And typically, there wasn't an intermediary bank like there is, for example, in the card schemes. With the four-party scheme or three-party scheme model of Visa, Mastercard, and Amex, respectively. What we've done, a lot of our merchants actually found that the ATA, A to A, account to account, wasn't all that convenient because they couldn't reconcile. They would need to download statements from their bank and use CSVs and reconcile manually and so on. So the instantaneity associated with open banking and SEPA Instant or FPS was lost because you'd have to have human operators downloading a CSV and then uploading that into their system to see whether they paid, reconcile, and then 1, 2, 3 hours later, at best, they could then deliver to the customer. So we identified that as a problem at ISX, and our solution to that as an electronic money institution was to issue the merchant an IBAN. And because one of our subsidiaries, ProBanks, develops core banking software and networking for more than 30 banks, payment institutions and EMIs in Europe and the UK, we adapted that software to also give an API hook such that when money lands in the merchant's account, we tell the merchant that the money has come in, it's actually been received, not just sent. So when you look at what other PISPs do, they give an indicating sent. But of course, as you're probably aware, money being sent doesn't always actually eventuate. We've seen instances where there's insufficient funds, there's account blockages, there's other issues, and the money doesn't actually leave the sending bank. So what ISX has solved is basically giving an API hook on receipt or settlement of the funds. That means that the merchant has absolute surety that the money has been received, and we at the same time then notify the customer has been received by the merchant, and the order can progress.
Fantastic. And I'd like to talk a bit about your key solution paid by, and I would like to ask, how is ISX Financial leveraging its paid by solution with an open banking platform and partnerships to provide merchants with new tools to enhance business growth, streamline operation, and improve customer experience. And maybe if you can share some success stories or examples where businesses have seen successful results by using paid by.
Look, I think our general, without getting into specific customers, our general revenues and profits speak to the success of the model. So we've seen our revenues grow in 2023 from 32 million to almost 60 million in 2024. That is driven by open banking, SEPA Instant and so on. And what we've seen, and of course the profits have grown from 13 million to 26 million net profit after tax. And the reason I'm giving you those financial figures is that I think we are the only profitable open banking provider in Europe and the UK. Now, we see a lot of our competition and what they do, and their revenues are a fraction of ours. They're nowhere near profitability. Their model just doesn't quite stack up for the merchant, obviously. If a merchant is prepared to pay for our model, and drive the volumes through our system, that must mean that we have some things right. The proof is in the pudding, as we say in English. So, it's one of those things that the general success of the company speaks to the model. Yeah. In terms of, other things that we're looking to do, obviously the UK has brought in regulation around APP or push payment fraud, and that is creating a good deal of consternation to the industry because the rules are reasonably, well, not reasonably, but they're quite draconian in terms of the way they, and they're not, I think, as effective as, say, card scheme rules in how arbitration occurs between fraud, real fraud, friendly fraud, and and so on. So I think that's an area that is going to need to have some market improvements in the UK. We haven't as yet seen the EU's full proposal in terms of how they intend to deal with that, but hopefully the EU will have more of an arbitration type approach rather than a fixed and final, which has been the case in the UK. But I think the biggest challenge for the industry coming up will be how it does deal with APP fraud and making sure that it's done in a balanced way to protect the consumer as well as the merchant.
Thank you so much. And one final question. I know that AI is a very important topic right now, and I know you have some strong opinions on it. What role does AI play in open banking payments today, and how do you see it evolving in the future?
Well, let me say this, as an engineer, I wrote my first AI algorithm in 1989, and it was for process control of an industrial plant. So I've had some involvement with AI over quite a number of years. Um, I think most of AI is puff. It's just overhyped and so on, particularly in payments. In payments, most of what I've seen is, a person seeking investment or seeking hype on the basis that somehow they're going to create an AI that's going to do all these magical things. Yet AI relies upon seeing a very large and comprehensive data set. And if you're not JP Morgan or you're not Visa or you're not MasterCard, you're not going to see that comprehensive data set in order to see the patterns. So I think you could write the best AI algorithm in the world, but without the data to train it, you're not going anywhere. So really it's up to those larger organizations to do that. Now, we've taken a different approach at ISX. We've invested fairly heavily in a company that performs or has proof of concepts with Mercedes, Porsche, Panasonic, other Japanese car manufacturers, and other industrials. And the approach there is that they're looking at micro expressions of the human face rather than big data. And what we're looking for is we're now training the model to look for things like confusion, which would be apparent during APP fraud. So if someone is pushing you to, basically create a transaction online and they're on the phone, as most fraudsters and scamsters are, saying, go on, do it, it'll be okay, and really the person to make it happen. There is a range of emotions that that person, those emotions that we are tracking to look at in certain transactions to see whether push fraud is actually being committed in real time. Now, when you couple this type of AI with the fact that we have to now do liveness checks for KYC, we already have a baseline of the person, their facial features, their expressions, what they normally look like, and so on. And we can get them to react in certain ways to train the model, such that if we do have a suspicion that push fraud is occurring, the AI can step in. And of course, we will notify users that the video is on. The AI can step in and look to see whether there is some element of confusion on behalf of the consumer. We believe that being proactive with push fraud is better than being retroactive in terms of all these rules and one thing or the other. So that's how we're looking at using AI. And I believe we're the only ones looking at using it proactively rather than retrospectively with big data. And you've heard how dubious I am about trying to get access to that big data as well. So yes, that's ISX's approach. And I think we'll see where that ends up probably in the next 18 months. But obviously there's a lot of work to do to make that work because the range of human emotions is quite large. But I will say that, we put this together off the back of a lot of research conducted out of Switzerland and a number of patents that have been in play. So the solution is entirely unique.
Okay. Thank you so much, John. We really appreciate your insights.
Thank you very much. Pleasure being here today.
Pleasure. And thank you all for watching.